What's up, guys? Yeah, so how you doing? There's this setup here that I did call out a few weeks ago, and I want us to do it again. So for the second time again, let's look at this setup again fundamentally, and this time we're going to, we are not missing it. Yeah, all right. So here, as you see on my screen right here, I have looking at the Australian dollar futures, which is just the AUDUSD. So in this case, guys, you don't have to trade this pair. You just need to look at it and see how fundamentals works. So currently, when you look at this first, we can call it indicator or this particular tool here. These are the retailers, right? These are the retailers' behavior. And down here, these are the fund managers. So for fundamentals, when it comes to analyzing fundamentals, first you have to understand the behavior of the retailers, then you have to look at the fund managers, then you'll have to look at the other category, which is the commercials. So right here, we can see retailers are getting more bullish. They're getting more bullish here, right? They are getting more bullish. And we know one thing, that if retailers get more bullish and fund managers goes against them, and again we get a group like the commercials again working against them, we are going to get a reversal in the market. So here, let's just look at a little bit of the behavior of this group. You see, like here, retailers going bullish. Look at this. Here, they spike to the upside and the market will drop. Now, we look at the retailers here, they get more bullish and the market goes to the downside. We look at this area, look at this spike. Retailers get more bullish and the market drops. Retailers again get more bullish here and the price drops. Again, retailers get more bullish. Look at this spike. Here, the market drops. Here, again, they get more bullish, as you can see, guys, and you get that noise dive to the downside. Here, they get more bullish. This, as you can see, you get that big drop. We can even go back and back test the previous historical levels. Look at this. They get more bullish, as you can see, and the market goes all the way to the downside and even here. So I can back test all the way, like I'm back already to 2020. And guys, this is just the behavior of retailers. So we can see that every time retailers get more bullish to the extremes, the market will drop. Yeah, it will drop. It will drop. So this is the behavior of retailers. Then here at the bottom, you see here we are looking at the fund managers. Fund managers are the non-commercials. Non-commercials this time, you see, they get more bullish. They get more bullish, and you want to see, you see here, they were just getting more bullish. You get the reversal. Look here. When they get more bullish, you get the reversal. So fund managers, they are a little bit different. We call them the trend drivers. They follow the trend, we'll say, trend followers, and also as well you can call them the trend drivers. So most of the time, when they turn, it means that they're closing their positions, they're sensing danger, and that time, that tells you that the market is going to do it. The market's going to reverse. So if I look at first, let me just show you something on retailers' position. You see, if you look at these retailers, we can see there's something unique about them. They have been bullish all the way since 2024. They've been bullish all the way up to 2026, like this almost 5 to 6 years. But now if you put them down and bring in the fund managers, I want you to say something about the fund managers. Fund managers, you can see, every time they get more bullish as well, the market will do the same. It will drop. They get more bullish, it will drop. They get more bullish, it will drop. So here, if there's something unique, why I like this pair, there's something unique about it. It's because when I look at the retailers, they have a very, very nice behavior. We look at these retailers, despite them getting more bullish, as we can see, I want you to see something here. The retailers in this case, they are very, very, very bullish. Look at this. Retailers, if you look at mark where they are currently here, see this is the highest place they have been. Yeah, they have been. So uh so if we look at this high and you look back at their behavior. You look back, guys, look at this. If you look back all the way up to 2001, retailers that have never been bullish like this. These guys that are at their all-time high. They are at their all-time high. If they are at their all-time high, they are at the extremes, and we'll see the market changing. Okay, we'll see the market changing. So if if you see them at all-time high, they have never missed it. They have never been bearish like this. For example, let me show you something. Can you see? I'll use another example. Can you see this low? When the moment retailers got more bullish like this, I mean more bearish like this was their all-time low. Like that was the last time they were bearish like that. And let me show you how the market behaved. Look at this. When retailers they were at their all-time low, all-time low. Look at this. Price took some time to turn and it went up for at least how many weeks? Let's say this is how they were bearish, but you see the low was here. The low was here. And price kept going up in the next 601 days. It kept pushing higher. So this prepares you for something that's likely to happen, that retailers are at their all-time high. And if they're at their all-time high, what's coming is that a drop is going to come in. Now, despite that, we want to look at the other group, which is which is which is the the commercials. We want to see what the commercials are doing. And if you look at this here, just go here, look at the commercials here. And now I want you to see this, right? I want you to see this. Commercials are getting more bearish, and something unique about commercials have never been bearish like this in the last, look at here, 2013. 2013 to 2026, this like 13 years. Commercials have never been bearish like this. So if they're bearish like this, we want to check on the index. All right, bring in the index, and I want you now to see what's happening here. So here on the index, move one group here, and I want you to see commercials. Let's do this. Commercials here, they get more bearish. They get more bearish. We look at the index. These guys are also more bearish. And again, we're just not looking at the index. I want to look back. How bearish, like for how long have they been bearish? I can be able to look back in the last like 2 years. I can go to the 2 years easily. And when I look at the 2 years, you see commercials remains to be bearish. So I just want to save on time and say, look at this 2 years. Commercials are bearish. On the index, they are extremely bearish. On this, look at this. Commercials getting more bearish like this. On the index, they were bearish and price drops. You look at this. Commercials here, they were bearish, as you can see. And here, look at that. They were more bearish. So what does that mean? Price drops here again. Now, commercials get more bearish here. Look at the index, they were bearish, and price drops. Commercials where again we have to look on index again. Look at this. The index, commercials stay here bearish, here they were bearish, and that is a massive, massive drop coming in there. So you can go back and back test into a lot of data. Look at this, commercials getting more bearish on the index, they're bearish, and you get that massive, massive drop. So look at this historical data, and you can see how the market behaves here. Now you can go to the third step and look at what we call the value of the market. The value is very, very important. So look at what we call the valuation in this case, and this we do it on a daily time frame. Now, on the daily time frame here, I can look, I just want to compare with the dollar alone. So you can remove this, look at only the dollar. You look at this is just DXY, which is on the chart already. So here we have the dollar, and we can look like 10 days. So here I can even go a little bit higher and check 15 days. So here I'm looking at the last 14 days here. And you can see if we get more overvalued, like what does it? This means that if we get overvalued, the dollar becomes overvalued against the Australian dollar. It means that the Australian dollar is cheap and it can be sold. Australian dollar is cheap and it can be sold. So here we're looking for a drop. Look at this. When we got overvalued here, you can see at least some red candles there. Look at this place. Got overvalued, and look at the drop. At least 1, 2, 3, 4, 5 days of a drop. So to get those, every time we get overvalued, look at this. This was a massive drop. Here we got overvalued. Price took some time, then it dropped. Okay, here, look at this. Here we were not even overvalued, but too close to overvaluation, and we got that massive, massive drop. Here we got overvalued, get a drop. Here we get overvalued, get a drop. Here again we get overvalued, we get a drop. And here again we get overvalued. Look at that, guys. Get a massive, massive drop. And lastly, right here we get overvalued. You can see this a drop there, some red candles here, and here almost getting overvalued. You never got overvalued here, but we are almost there. But again, you got that drop here, you get overvalued, drop, press some time, then drop well, and possibly here you get overvalued and get that massive drop. And lastly, here, right? Lastly, here, overvalued and you got that drop. So something unique I want to show you guys again, something unique. I want you to see this, all right? I want you to see this. I want you to see this. Something is happening in this category of the fund managers. Look at them. Fund managers, we have now what we call a divergence. Divergence is whereby these guys, they are hooking to the downside, as you can see. Zoom in. Fund managers, this means that they're abandoning their long position in this case, right? I don't know how to do it. Let me just do it again. Okay, there. You see, you have that divergence. You see, they are pointing to the downside. But now look at price. Look at price. Price is doing the opposite. Price is trying to. Market has been pushing higher, so price is attempting to do it, to go higher. Price is attempting to go higher, so that prepares you for a drop. And I want you to see it in terms of numbers. The AUD currently, in the previous days, the Australian dollar has been very, very bullish. This means that the pound, when the pound was weak and the Australian dollar was very bullish on the GBP AUD, you got a very strong bearish market. But I want you to see this. We come here. I want you to see what has been happening on the AUD, because also I want you to see the numbers, not just the indicators, because when you look at the tools that you don't understand how they work, sometimes it's not really good. So let's come here. Look at this. So we're going to look back. We're going to look back at least. Look at these numbers here. You see from December 2025, AUD was weak. 81, 84K, and it changed around in January. It got positive 71, 7.1K. Institutions were putting in long positions, and it started since that time from January. It started getting more bullish because institutions were putting in long position from 7.1K all the way, guys. Look at this, all the way to 81. So this means that from January, actually just from January all the way to April, look at this, from 7.1K to 81K. This means that institutions have been hedging long positions. They have been holding their long positions here. And look at this, from January, where's January? January, this November. You see, from November, price has remained consistently bullish because institutions were holding long positions. But now, since everything is touching the extreme, look at this. They have started reducing their longs. So if they started reducing their long from 81,000 back to what? Back to 70,000. That's a difference of almost 10,000 contracts. A difference of almost 10,000 contracts. This means that institutions have started hedging short, right? And most of the time when they do this, probably they are closing their longs. For institutions to close their longs, they open the short positions. So let's see if indeed they are opening shorts. So here, we're just going to use this other side to see things in real time. So let's do it very quick, very quick. And here I'll have to verify my I'm human or not. So it's gonna take a second, guys, to verify us. We are successfully verified. So we go home, click to home. It's very quick, sorry. What is this? This is an ad that you can just remove it. Then you go lower. So we go lower, and you go to the Australian dollar. Now, when you go to the Australian dollar, we're looking forward to do what? We're looking forward to look at the recent report. Look at this. These guys that have closed longs, they have closed 3,816 and they have opened 6,817. These are the fund managers. If they do this, guys, I'm telling you now, you're going to get that drop happening. So lastly, let's do one more thing to conclude our analysis, fundamental analysis. So here, probably I'm going to pause a little bit, then you're going to proceed. So hold on a second. As I do this. So guys, here we're going to look at the season of the market. If you look at the season of the market, currently, if you look up here, I'm having the AUD, which is Australian dollar. So we want to see where is it expected to go according to the seasonality tendency, or what we call the seasonal cycle. We look at the 2 years seasonality, right? We look at the 2 years seasonality. I see the AUD is being projected in 2 years' time. You see, we are looking forward for it to drop. If I look at the 5-year seasonality, you see, shows you that the trend, in fact, the drop should happen today. Look at this. I have to drop all the way from April all the way to May, late May. So this is a drop that we're looking for to happen. And if I look at what we call 10-year seasonality, you can see we are at that high and we're looking forward slightly to drop again and up to late May. You can see this April, then it's May. So we are likely to get a drop of at least the next 1 month. So guys, that's what I see in terms of seasonality, right? That's what I see in terms of seasonality. So technically, what do we have here? Because you might want also to understand the technicals. Technically, if you look at this pair, we'll go to the monthly time frame, look at the trend, and look at this pair. Averagely, we can see that we've been having what we call a bearish trend. Went here, but you did not take out the low, did not take out the high. Price is inside this range according to big time frame structure. But if you look at what we call the pivots, the quick pivots, here we have this, have this, I 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 have this. So now look at this in terms of market structure, pivots. All pivots are not aligning because I want for bull market, I want at least most recent pivots to be at least 3 highs, then 2 lows, right? 2 lows, then I said what you call the continuation for bull market. Now, for a bearish market, I'll want to have 3 lows, that, then when the price correct here, I traded the continuation. But in this case, nothing is aligning. So here I don't want to waste much time because you know your technicals. So here I'll say I'm in a sideways market and probably I'm looking forward for a demand. So now look at this area, this is where the current price is, and this is where we are, but this is what we call the monthly time frame. So if I look at the monthly time frame, then probably this is the this is the OB, call it immediate order block that I have here. Price is in it, tested the level, so you can refine this level to a weekly time frame. Now, if I'm refining this level to the weekly time frame, probably I'm going to go here, refine the level to here. Up to here, and probably from here, see this area, it's been tested here, so we want it to be fresh. Go back to the basin of this candle, call it the larger time frame, and again it's tested. So we go to the daily time frame and look at this. We are finding our zone inside another huge massive time frame. So here we can say, let us define our zone all the way to the body of these candles. There's a refinement, and here we can say that's where we have our own supply. So our supply is right there. Our supply is here, rally base drop, and look at this. It's fresh, not tested, but look at this. Where's the market? Market is back at that same place, and I've seen the market is overvalued. So what are we looking at? We are looking for a drop from that area. A drop from that area, guys. Nothing else to wait. We need to be in this trade. So look at this. So I'm going to show you on the AUD because that is the AUD futures. So let's go here and let's just get rid of these things here. And we're going just to apply the same. Already have done the analysis. So I'll just go all the way here and look for that particular supply. The supply is here. The supply is here. Not supposed to reach here, but these are pivot. So I want to keep my stop loss safe. Don't want to gamble my stop. So here, right here. So if that's where I am entering the trade, this is what I should do. I put my stop loss above 30%, the entire zone. So my stop loss will be up there because I'm trading institutional levels. I don't want to have a tight stop loss so that I get stopped out. So this is what I'll do. I put in my entry. Yeah. Stop goes up there. Now I'm targeting probably the first weekly opposing demand. So the weekly time frame. So this, there's probably I'm going to monitor these areas. I want to be aware of these areas. So probably, who knows, probably we might come. I like to target at least 3R, so but if we come all the way to this area, we get almost 4R. So we get almost 4R. So we don't know if this market, let's target here, because this rally is a reaction of this. So stop, target goes down there, and that is 4R. Guys, this one is a swing trade. If it plays that well, very nice. But let's say that unfortunate something happens. Now a lot is going on. If Middle East war continues, this could be the next place. will target to re-enter this trade because it has to go down, it has to drop. But meanwhile, this is where we need this trade should be here. And guys, I'm already in the trade. Unfortunately, we did this analysis. I've done it multiple times, and this time was just a reminder. It's not late. If you are someone who looks for confirmation, go look for that confirmation before you jump on that trade. If you want to do what, but this is the best place to re-enter this market. So where are we? Where is it on my watch list? It's here. And look at that. Already my trade is active. I will go to the daily time frame. Show you here. The trade is already activated and we are already in the trade, guys. So let's see how the market will play out. If you have never traded using fundamentals, I'll say use this trade as a case study. You don't have to open up positions, you don't have to trade, but monitor how it's going to play out. Then maybe from it, you're going to learn something about fundamentals. Otherwise, guys, have a great day. Have a great week ahead. I hope I'll see you. Unfortunately, also, there's another trade that I took the other time, AUDCHF, and it's been very difficult for that trade to drop. It's really, really playing hard to get because unless the AUD USD goes down, AUDCHF is going to continue to be a headache in this case. So let us be patient, wait for the market to see how it's going to play out. Otherwise, guys, have a nice week ahead.